Canadian venture capital deals have tumbled to pandemic-era lows. That's coming from a new report by the Canadian Venture Capital and Private Equity Association. So let's go to David Kornacki, Director of Data and Product at CVCA. Thanks for joining us today.
Thank you so much for having me.
So why do you think there are fewer deals so far this year?
Yeah, I mean, it's just as the CEO in the earlier segment mentioned, it's uncertain, and it's no surprise that Canadian investors are also experiencing that. There's uncertainty just to overall macroeconomic trends, but also we're seeing a pullback. Canadian venture capital is a risky investment, and Canadian investors are not separate from that. And it's something that we're seeing that on the early stages, the pre-seed, seed, and Series A stages, there is a pullback, which will drop down all of investments and investment counts across the board.
So it's not just deals, but dollars invested dropping. Do you get the feeling investors are putting money elsewhere or just sort of hanging on to what they have?
I think it's really shoring up what we saw during COVID. We saw investors really focus on their current portfolio, and that was what we're seeing as well. We're seeing investors make sure that their current portfolio is reducing burn and that they're remaining capital efficient, that they have capital on hand to make sure that their portfolio companies, can ride out this next little phase of uncertainty. So yeah, definitely we're seeing a reduced number of deals and dollars invested, specifically on the large scale as well. And mega deals were also down. We only had about 8 mega deals, and mega deals, what we define as 50 million plus. So we're definitely seeing investors being more cautious and, focusing on their current portfolio.
Of the deals you have seen made, what are the sectors benefiting?
Yeah, so we're seeing drop downs across the board, except for one sector really is life sciences. We saw this again during times in COVID, which made more sense given that was a health crisis and we saw more investment into healthcare. But we're seeing that again this year. It seems to help. Life sciences is a resilient sector that doesn't ebb and flow as much as other sectors, specifically when it comes to impacts in the supply chain and just macroeconomic trends.
Okay, are there regions of the country that seem to be doing better?
Yeah, so one that stood out in particular was actually Manitoba. We have seen more increase of investment. There was one actual mega deal that was closed in Manitoba this year, which did drive a considerable amount of the investment. But Manitoba has the most dollars invested so far that we've had on record, and our record to show from 2013. So it's definitely a region that is interesting. Back when I first joined the CVCA about 8 years ago, we saw investment across basically 3 provinces, and now we're seeing investment across the board, across the country, in the prairies as well, and in the East Coast and the Maritimes. It's exciting to see that investment is more across Canada versus the Ontario, Quebec, and BC markets.
Yeah, that is good to see. Okay, so U.S. investment, what does that look like so far this year, U.S. investment in Canada?
Yeah, so in H1, we did see about 29% of all investments had a U.S. investor participating. That is a drop from the record highs that we saw in 2021. We saw about 35% that invested in 2021. But that's not to say that, these investments are, what we see is that we do see a bit of more of a pullback from the U.S.
Okay, so based on what you've seen so far, what's your expectation for the rest of the year?
Yeah, so this is interesting because it's not like previous crises where we saw, like in COVID, the world stopped. Everything, investors paused, they made sure, their investments and whole entire markets pivoted and whole entire business strategies pivoted. Here, we're just seeing more caution. And I expect to see the rest for the remainder of the year. I expect to see caution. In 2020, we saw 2021 receive record levels of investment. I don't think that will be the case in 2026. I expect it to be more of the same of what we're seeing right now, which is much more caution, more intentional, and more steadier investments rather than just a flurry of investments in 2026.
Got it. David Kornacki, I'll leave it there. David is the Director of Data and Product at CVCA. Thanks for your time.